Hi, everyone. Welcome to Crypto Defined. My name is Kathy Chu. I'm your host for this weekly interview series where we look at the innovators, the disruptors, and the skeptics of the $3 trillion crypto industry. Crypto Defined is put out by recently launched TruthDAO. It's a new journalism organization devoted to nonpartisan, non-biased news, and you can find us on truthdao.xyz. Today, we have the pleasure of hosting Asheesh Birla, who is the general manager of RippleNet, the technology platform that allows for global crypto transfers. RippleNet is part of fintech company Ripple. Asheesh first joined Ripple in 2013 to lead the development of its product suite. Asheesh is considered an expert on blockchain technology. He started his career as an entrepreneur close to 2 decades ago in Silicon Valley, where he founded a content management company that was later sold to Thomson Reuters. He has also advised a number of startups in Silicon Valley. Asheesh was featured in Fortune magazine's The Ledger 40 Under 40 in 2018. Congratulations, Asheesh, and welcome to the show. Thank you so much for being here.
Thank you, Kathy. Well, when you say 2 decades ago, I feel really old, but it's really been awesome to be part of the journey in the tech space, but then over the last decade in crypto as well. But again, thank you for having me on. I'm excited to do this.
Thank you so much. And I said nearly 2 decades ago, so you shouldn't feel too old. I did put the nearly in there. So,
Appreciate it.
Ashish, a lot of interesting things to talk about. Blockchain technology is something that our Discord community has been talking about. I know people there have been talking about what should we ask Ashish about blockchain. Everyone's interested in developments in the blockchain. People are interested in the movement of crypto across borders. So we have a lot of interesting things to talk about. Let's just wade in here, Ashish. Ashish, I think people, when they first hear about Ripple, these days it's hard not to think about the SEC case against Ripple, which has made a lot of headlines these days lately. I know your CEO has been on CNBC and other venues talking about it. And for people who may not remember about this, the SEC believes that Ripple's token, called XRP, should be considered a security because uh, it's not exactly like Bitcoin and Ethereum. Ripple has said XRP is a currency, meaning it's not subject to securities regulation. What I wanted to ask you is how is the uncertainty of that case weighing on the company as well as on RippleNet, the technology platform that you manage?
Yeah, so I mean, it's a good question. I think like number one, I think the entire industry, has is looking at this case. So the entire crypto industry is looking at this case to set precedent. So I think it's not important just for Ripple. I think it's important for the entire crypto industry. And in terms of how it's impacted us, I mean, we are coming off of record growth in our business. And in RippleNet, the division that I run, which provides enterprise crypto solutions for financial institutions and corporates, is doing really well. I mean, we've had a banner year. We're doing a run rate of over $15 billion for our payments business alone. So I think that in terms of how it's affected us, I mean, we're resilient as a company. We've been doing this a long time, and these little bumps in the road, aren't going to deter us from our goal. And again, I'm just really happy that the team, our customers, they're seeing a lot of value in what we're building, so much so that they are double downing on our product and continuing to help us grow as a company, which I think also helps the industry as a whole as well.
Great. And I want to get into those numbers on your growth, but you mentioned something interesting that everyone is watching this case. So whatever the outcome of this case, it's not going to just have an effect on Ripple, but it's going to have an effect on the entire industry, whether it's the XRP is considered a securities or not, correct?
Yeah, I mean the speculation is that this case, would set precedent for the SEC to determine a whole bunch of other tokens or digital assets as securities as well. And so again, that the industry is watching. From my perspective, the case has gone really well. Unfortunately, with working with the government, even though it is going at breakneck speed for the government and for the judicial system, it's been 18 months plus, since the case got started. And as of right now, the judge has outlined a schedule, and the earliest that we would see something in terms of a summary judgment that the judge will put out would be early 2023. So we got a schedule. I think that's good news. I think the judge has been doing a good job managing the case. A lot of the little battles that have been going on day to day, I think we've come ahead on a number of those battles. But again, she outlined the schedule, not what we wanted in terms of timeline, but at least we got some clarity that things would be wrapping up in 2023, at least from her perspective, the judge's perspective, in terms of her schedule.
Okay. Well, even with this uncertainty, RippleNet, as you mentioned, had a record first quarter. I read your tweets. You're a very prolific tweeter. I read your tweets on this. RippleNet had a record first quarter in terms of global money transfers. And for people who don't know too much about RippleNet, Asheesh, RippleNet allows for crypto to be transferred around the world, correct? It's kind of like the SWIFT of the crypto world. Is that correct? So talk to me about how this works and why you had a record first quarter.
Yeah, absolutely. I mean, just to go back, one thing that we introduced early on was a more modern type SWIFT replacement for moving money cross borders. SWIFT technology is built in the 1960s. Today, you have companies that are global almost instantly using the internet. They needed something more modern. We created something called RippleNet in 2015. But then we introduced the ability not only to message, but to settle payments. So that is actually moving funds in 2018 with an add-on service called on-demand liquidity. And the add-on service leverages XRP, a digital asset, to move money around the world. And that product has grown tremendously. As soon as we introduced that product and we started gaining momentum, we saw RippleNet traction go through the roof, which has been really exciting. That value proposition is really moving money around the world a lot faster with less cost in terms of capital costs of pre-funding around the world to grow their business. And again, a run rate for RippleNet overall, $15 billion. That is awesome. I would say hey, that is better growth than I had expected. So I'm excited about continuing that. We're also available, the ODL product, on-demand liquidity product that leverages XRP, is available in 23 countries. So you can use our product to pay out into 23 different countries around the world. We're really excited about that. And again, we're doing great, especially in emerging markets where there isn't a solution like ours. It solves a real customer pain point.
So Asheesh, talk to me about some of the reasons people need to move crypto overseas. Is it the same reasons that people would move money in the traditional banking system? I'm sending money to my relatives in another country. I'm doing business, so I need to send a large amount of money overseas to Europe. Is this the same reason that crypto is being transferred overseas, or are there different reasons for crypto moving across borders?
That's a great question. So I would say one thing, and we're going to hear more about this over the next 4 or 5 years, I hope, from the rest of the crypto industry. But from day one, we were focused on real world use cases, and the real world use case isn't really moving crypto. The real world use case is folks need to send money internationally. And we started with remittances, hard to reach destinations that were really expensive and slow. Imagine sending remittance to a family member in India or the Philippines or Mexico and having to wait 2 to 3 days for them to get real funds that they need to buy milk, buy food, get their kids educated. So that's like where we started. We were able to cut costs down, and we were able to get those funds into the destination instantly. And if you look at how the industry operates, there are two ways that folks move money prior to a solution like Ripple. So one, you could use the correspondent banking system. The largest banks around the world, very slow, very expensive. You have to use Swift, ancient technology to use that solution. Or two, a lot of companies started innovating by cutting out the correspondent banking system and opening accounts in these destinations and pre-funding. So basically, if you want to get instant payments into Mexico or to India or to the Philippines, you actually pre-fund those accounts. But that's really costly. Shouldn't startups and companies like use that money to improve the product experience and not sort of facilitate payments? That's where a solution like RippleNet's ODL solution really started to take traction, solve a real pain point for our customers that want to move money internationally. So we started in remittances, but now we're moving money for corporates. We're moving money for SMEs. A lot of folks are seeing real value in using our solution as a better way to move money internationally.
And you have to use the XRP token, correct? You cannot, with RippleNet, you cannot use Bitcoin or others. You have to use XRP, correct?
That's correct. And we experimented early on, especially when there was very low liquidity in the market overall with using Ethereum, using Bitcoin. But the costs of, on the Bitcoin network or on the Ethereum network, the gas fees associated with it were just too prohibitively expensive. And so one thing that the XRP ledger does is that it's very efficient, only a couple of pennies, fraction of a pennies to settle transactions. It was really fast, 3 to 5 seconds versus the confirmation times you need with Bitcoin. So we're going to continue to look at all sorts of technologies to help our customers. But in terms of the settlement, XRP was built for payments, and it does a great job for what we need. And mainly, our customers love the experience we're able to offer with our product.
You mentioned it's 3 to 5 seconds for the transfer, and the costs are very low. How does the cost compare to other cryptocurrency transfers like Bitcoin?
Well, Bitcoin, the way that Bitcoin and Ethereum work is that it's sort of like dynamic pricing. So, it's a little similar to like how Uber works. This morning it costed me $15, but when the Warriors game was going on a couple of days ago, it was $40 to get home. So, it's similar to that on the Bitcoin network and the Ethereum network when there's a lot of traffic. So, maybe there's a hot NFT on Ethereum, the gas prices dynamically go up. So our customers didn't want that. If I need to send money home, I can't decide that, whoa, today's not a good time because there's a Bored Ape taken off on Ethereum. They need to send it every Friday right when they get a paycheck. So that consistency and reliability is really important to them. And again, having to spend $40, $20, maybe $5 if there's a low demand day, that's not the kind of reliability our customers told us they wanted. And so again, with the XRP ledger, it made sense to use it as a settlement solution because you can rely on the fees being very, very low.
Okay, that's very helpful, Asheesh. Now, I was thinking about this and thinking, is the aim of RippleNet and other competing platforms, is the aim to eventually replace Swift? I don't know if you saw the MasterCard CEO's comments at the World Economic Forum. I think they were asked, the panel was asked whether Swift would still be here in 5 years. Everyone said yes, and the MasterCard CEO said he did not think Swift will be here in 5 years. So I was thinking of that when I was writing these questions for you and thinking, is the aim to replace Swift?
Well, I think we have bigger ambitions than replacing Swift. So remember, to move money internationally, there's two components. There's the messaging component, but then you actually have to move the funds. That's not what Swift does. Swift only does the messaging. So they help banks communicate with each other around the world, but the settlement is done out of band. The great thing, I think, what's really, really innovative about crypto and RippleNet is that we do both. we've modernized both. So using Swift for messaging is like WhatsApping using a fax machine today. So we modernize that using APIs, it's real time. But then we also do the settlement. There's not another solution out there that does both instantly like RippleNet. And so, our solution is now, a lot bigger than what Swift does. I think Swift is going to be around for 5 years. It takes a long time to change like the entire banking system. I mean, upgrading the mainframe at BNY Mellon is probably a couple $100 million to do to modernize that so that they can move off of Swift. So I think Swift is here to stay. I think the most innovative companies today are going to move off of Swift, and they're going to use modern technologies like crypto and what we're building at RippleNet. And that's really what's helping us grow. There is really no other alternative to Swift that's comprehensive and does more than the one that we built on top of crypto. So I'm excited about what's ahead for us.
Ashish, bigger picture wise, if you look 10 years from now, do you expect most people to be moving money overseas by crypto? I mean, is that one of the goals?
Yeah, it is a absolutely better way to move money. Absolutely. But, I remember like I started my career, and again, we can just keep dating myself here, like, 20 some years ago, or nearly 2 decades ago. But, the internet was really hard to use, when I first got started. But today, my mom sends me a message every morning, good morning. Did you have your morning, chai or whatever? But she sends it to me, but she doesn't realize she's using the internet. It's behind the scenes, but it just sort of works, right, on her iPhone or on her iPad. And I think crypto is going to be really similar. We're all going to use crypto not only for moving money, but all sorts of other use cases. But it's going to be embedded into our daily lives. It's going to be plugged into our iPhones. It's going to be plugged in the background to our cars. It's going to like really be something that's an enabling technology. I don't think people are going to wake up in the morning and say, listen, Kathy, I'm going to send you some crypto. They're going to say, hey, listen, Kathy, I'm going to send you this cool NFT, or I'm going to actually send you some money. And in the background, that process and that infrastructure will be powered by crypto, because no doubt this is a better way to move money. No doubt this is a better way for finance to be built beyond even payments. I know that hand from building products in this space over the last 9 years.
Okay, so in 10 years, you expect that to be happening. We'll check in. We're
I'll
still
say
around 10
5 years.
years.
I
We'll,
expect that
we'll,
to
we'll
happen.
check in here. I want to remind the audience, if Ashish says something that you find interesting, you would like to ask a question, on the bottom right of your screen, you'll see a react button. You want to hit the react button, pick an emoji, and then type in your question to Ashish. And at the end of the segment, we will have some audience questions if there are any. Okay, so as Ashish speaks, keep that in mind. Feel free to ask questions. We can bring you on video, or we can just ask the questions ourselves for Ashish if you're shy. Okay, Ashish, let's dig a little deeper into the trends of global money movement, because it is very, very interesting what's happening in the crypto world. You and I, the last time we talked about how a lot of RippleNet's growth is coming from overseas. And I have two questions for you on that I think the audience would really like to hear about. One is, why is there not more US growth? Is that related to the legal uncertainty with the SEC case? And secondly, where are you seeing most of your growth overseas coming from, and why?
Yeah, great questions. I would say like number one, like as a macro theme, the reason that we're seeing a lot of growth, especially in emerging markets, is because these nations, these regions are digitizing really, really fast. Folks are getting an iPhone or a computer for the first time, and now that opens up a new way to send and receive money. So we, early on at Ripple, we hit that first inflection point. And again, when they're rebuilding something, they're looking to new solutions like RippleNet to rebuild their technology. So I would say like that's one really big macro theme that's helped us grow, and it's helped us tackle the emerging markets. I would say, like, why haven't we seen more growth in the United States? I think part of it is like, hey, the United States is already, largely digitized for the most part. But secondly, in a lot of these emerging markets, those regulators have been very proactive in terms of regulating crypto. And so banks in those countries, financial institutions, fintechs, feel a little bit safer from a regulatory perspective of trying new technologies. And you're seeing that flourish in, Latin America, in APAC. Again, the governments have been proactive because they know that this is like a technology that could help open up their economies. They benefit too if more of money is coming in and less of it's going to fees to like large banks. That means there's more money in their country to spend on GDP and help them grow and prosper as well. And by the way, like this is this should sound familiar because in the 1990s, the United States was the one that was regulating the internet. We were being proactive about it. We created regulation. And as a result, you've seen so many companies from Apple to Google to Amazon flourish in the United States, based here. But again, it started with a really good bill back in the 1990s that was bipartisan that paved the way for these companies to safely operate in the United States. These companies, meaning leading internet companies that you know today, were possible because of proper, good, proactive regulation by the United States government.
Now, was Asia, I believe, one of the highest growth markets, Asheesh, in your latest results?
Yeah, so APAC continues to be one of our largest contributors to ODL volume, the on-demand liquidity product that uses XRP. In quarter one alone, APAC drove $1 billion of ODL volume. So, you are seeing that product just take off in that region. And again, a large part of it is absolutely because there's we're riding macro tailwinds of digitization in the emerging markets. But two, there are so many countries like the Philippines and so forth that have very proactive governments that are making it safe from a regulatory perspective for financial institutions to adopt things like RippleNet.
Okay, fair enough. Now, switching tracks a little bit, with what's going on with Russia and the Ukraine, there's been a lot of talk on Twitter, on talk shows, about whether a country like Russia can escape global sanctions, can bypass global sanctions by using cryptocurrency. I read your very interesting Twitter thread. I think it was maybe 6 or 7 tweets. Is that right, Asheesh? About why you think that's not the case. So talk to us a little bit about that. Um, with global sanctions, why cannot countries like Russia use crypto to escape these global sanctions?
Yeah, so I know that was like a narrative and about, hey, maybe like, becoming a little bit anti-crypto by politicians. But, within a few minutes, I was able to pull data to debunk that sort of viewpoint that crypto is going to be used to avoid sanctions against Russia. And for two reasons. Number one, to move money, and we've learned this by building on-demand liquidity in RippleNet, you need crypto liquidity in the markets against the fiat currencies like the Russian ruble. And quick analysis showed that if you really really tried, you could move maybe $200,000 at a time out of Russia using cryptocurrencies because of the like very limited liquidity. Russia needs to move 75 billion dollars a day to be to function. So that is not, even from a liquidity perspective, that is not going to be possible. Secondly, as soon as you want to move money off of crypto, you need to use a financial institution or a regulated exchange. And crypto is not anonymous. I mean, you can completely track where this is coming from. As soon as you try to move it off of crypto, you're going to hit a regulated institution that is going to flag a payment from Russia because of sanctions issues. And so it's very hard to use crypto for evading sanctions like a massive government like Russia. So absolutely not. I mean, I think that was just a convenient sort of viewpoint folks wanted to promote for a different cause, but in reality, not going to happen using crypto.
Well, that was very interesting, and thanks for putting numbers to that. That was very helpful for people to see. Now, you just said something very interesting. Crypto is not anonymous. A lot of people have thought for years and have still believed that crypto is very anonymous. That has led to the thinking that crypto transfers, a lot of criminals are using crypto to transfer money illicitly around the world, and that crypto is the currency of choice for dark lords and criminal gangs, whatever you'd like to call it. So, based on what you see at RippleNet and just your position in the industry, Asheesh, can you shed some light on that? Is crypto used for criminal activity? And if so, why? If it's not, why not?
Well, I mean, one, it is an open and decentralized technology, and I think as soon as folks hear that, they think, "Oh my gosh, like it's open, anyone can use it and use it for illicit activities." And does that happen? Yes, it definitely happens using this technology, but does it folks think that it's anonymous. I mean, you can see the movement across every single major blockchain out there because it's out in the public. And there's been a lot of cases out there where they've actually been caught because they moved money across the blockchain, and these addresses are easily identifiable. Why? Because at some point these these thieves or these launderers are going to need to exit the system. And as soon as they exit the system, they have to be identified because they need to get it into a bank, or they need to exit it via a crypto exchange. And these crypto exchanges don't want to lose their license. And so they are going to adhere to the local policies. And there's been a number of cases over the years where as soon as they try to exit the system, there's the regulators and the police or the enforcement waiting for them. So it happens. It probably happens in small amounts. As soon as you try to move significant amounts, there's a lot of different sort of checks and balances, especially as you try to exit the system, that sort of prohibit them from using it at large scale.
Okay, that makes sense. That once you exit, there's regulation, right? And you cannot exit anonymously and just take the money out. But is it possible for people to stay within the system for, I don't know, years, for quite a long time? Because one thing I've heard as I've been reporting on some of these areas, Asheesh, is that there's this belief that because there's so much money sloshing in the system that can't get out, that's why prices for things like NFTs may be very high, because people have nowhere to put their money but to put them in NFTs, put them into tokens, put them into quasi investments in the crypto world, because they don't want to exit right now, or they're trying to figure out an exit strategy. So is that a possibility at all, or do you think that is not a possibility?
Yeah, I think that again, there might be some small scale, illicit users trying to stash their money in crypto, but I think that at some point you need to exit the system. And yeah, you can stash it in an NFT, but I think at large scale, you're going to need to get it into a bank account to use for whatever you want to do in everyday life. And again, yeah, you could temporarily stash it, but just keep in mind, as folks are watching every movement, and every time you move money across Bitcoin or any of the public ledgers, someone is tracking that, and especially if they know that it's already been used for nefarious activities. Everyone is tracking everyone from Satoshi's wallet to the Mt. Gox, which was a large exchange that got hacked years ago, everyone's still watching those wallets. Anytime there's a movement, there's a whole bunch of alerts that go off. And so really hard. Yes, you can temporarily stash it, but as soon as you move it and try to exit the system, again, there are a lot of safeguards. And there'll be more safeguards put in place to prohibit that from illicit activity. And this is where I think the regulators should come in and put in, the framework to make it safer. And I think like that's an area where I'm really happy that at least some regulators are starting to think about how to regulate the on and off ramps to make it safer. And as a crypto industry, maybe we can actually be more proactive and come up with our own regulation and bills so that it's safer to use instead of waiting around for the regulators. I'd love to see the crypto industry go out there and be proactive and create our own sort of code of ethics and legislation.
Interesting proposal. So, Asheesh, let's talk about blockchain since you're a blockchain expert. But before we do that, I'd like to remind the audience if you would like to ask Asheesh a question, as he's talking, if you hear anything interesting, if you had a question that you've wanted to ask him for years but can't reach him on Twitter or anywhere else, now's your chance. You want to hit the react button on your bottom right of the screen. Okay, you're going to pick an emoji and then you will type in your question. The producers will be able to see your question and we will entertain a question or two at the end of our show, which will be coming up soon. So please go ahead and feel free to bombard Asheesh with one or two questions. Asheesh, so on the blockchain, you're considered a blockchain expert. So I wanted to ask you about the promise of blockchain. And you and I have talked about a little bit about this before. For a decade now, people have talked about the promise of blockchain for so many different applications, right? That one day you'll be able to use a blockchain to change the way you buy and sell things, to change the way that you're verified, not just, to be able to see who's doing what on the blockchain, but to be able to verify your identity through a number of purposes and applications. A lot of that has not come to pass at the moment. Blockchain technologies are being used in a lot of different ways, including in cryptocurrency trading apps. But I wanted to ask you, why is blockchain technology not being used for more apps that directly impact the consumer? What's the reason behind that, and do you think that will change?
I love that question because I really feel passionate about it. Is that for this next phase of growth, until 2025, we really need to be solving real world use cases. And I'll say it probably hasn't happened for a couple of reasons. Number one, there was a lot of like frenzy and money to be made in trading other cryptocurrencies for things that you even mentioned, like NFTs or other tokens. And so that's a lot easier of a product to build. You just have to worry about serving the rest of the crypto community. They don't need to worry about like on and off ramps that we talked about. They don't need to worry about regulation to some extent as well, because they're trading within the crypto industry. But as soon as you start connecting it to the real world, it's a really difficult problem to solve. We've been building those solutions for 9 years. We have a big head start, but I'm telling you, that was a lot of hard work and working with local regulators, working with local financial institutions to connect it to the real world. So, I think like folks need to be thinking about building for the longer term in crypto. And it hasn't happened again because one, there was lower hanging fruit in other areas of serving just the crypto industry. And again, I'm mentioning it's taken a long time to get to where we are, over 15 billion in volume. And secondly, like the actual regulators in places like the United States need to come up to speed and create a safe place from a regulatory perspective to connect with local corporates and financial institutions. I don't think that the largest financial institutions around the world want to risk their license and their good standing with the regulators to experiment with new technology unless the government explicitly says it's okay to do so. And they've been very unclear on that part. So until those two things really change, again, one, you need folks building for the longer term, and secondly, you need proper regulation. You're really going to see like the innovation a little stifled and not ready for real world adoption. I want this to be used by everybody because I know the kinds of benefits that crypto brings. But again, we have a lot of work to do to get to that point, and I think it's going to happen, but not until those two things get solved.
What's interesting, Asheesh, is as I talk to different guests, almost everyone I talked to on the show has talked about the need for some type of regulation in the crypto industry in order to spur innovation. And it's interesting to hear just the perspectives that without some regulations and certainty, this innovation can't happen.
Sorry, that's just crazy that, that wasn't always the case. So it's refreshing that the industry is actually maturing. I think early on, in 2013, when I first joined, folks were, the crypto folks were saying, we don't need regulation, we don't need governments, we don't need financial institutions. There's a whole new world being built here in crypto. But that's stifled growth, again, for the reasons I mentioned. You need to connect this to real world society. And to do that, you need regulation. So one, I'm just happy that folks are putting a lot of effort behind this. I know there's a lot of really interesting different groups being formed to actually advocate for proper policy in the United States. So that's all really, refreshing to hear. But again, now it's on to the government to step up. I thought Biden and the White House, in their executive order that happened a couple of months ago, was a big positive surprise for the crypto industry. The government seems to be also waking up to this notion that, hey, listen, we need to get moving here on creating proper regulation. There's also a lot of regulation, at least talk, around the stablecoin aspect of it. And how great would it be if every bank in the United States issued a stablecoin on a blockchain? Now that would connect it to real world society and solve real world problems. But that stablecoin regulation needs to pass. It needs to get adopted, and it needs to be well written, just like the Telecommunication Act was written in the 1960s that helped the internet flourish. But I'm excited. I'm excited to participate in it, excited to help guide it. I think it needs to happen. I think more of it needs to happen more broadly for us to really take off as an industry for this next phase of growth.
Great. Thank you for those thoughts. Audience members, if you have any questions, now is the time to ask Asheesh. Victoria, our wonderful producer, are there any questions from the audience?
As of right now, I don't see any on our end, but I believe that you may have some from the other communities.
Okay, so Asheesh, we are going to ask you our last question, our inaugural guest to answer this question that we will pose to everyone who comes on to Crypto Defined. Since the show is called Crypto Defined, what do you think defines the crypto industry?
Yeah, so at this given moment, there's been a lot of adversity that's happened over the years. I mean, definitely since the early days of me being in the industry, starting with Mt. Gox collapsing in 2013, but then more recently with the Luna token collapsing. I think the one thing that I really do appreciate about the industry, and I think it really does define it, is the resiliency. And I really thought that the Coinbase ad, if you haven't seen it, that came out over the last few days, talking about how, with every single time some adversity happens, the pundits out there say this is the end of crypto, but they're dead wrong. I mean, the industry is so resilient. It bounces back, it corrects, it creates a new platform for the next generation of growth. So the ad from Coinbase sort of ends is that crypto is here to stay, right? We're going to get through this together, and so resiliency is definitely how I would define crypto. I would say at this moment, but also throughout my history of being involved in the space, and I love the way where it's headed. I think these downturns are a good time to self-reflect and get back to building, get back to solving real world problems, and helping us create that next level of growth for the industry.
Great. Well, Asheesh, it was a pleasure to have you on the show. Really appreciate your time. Audience members, stay tuned. We are going to have a recap and we're going to look ahead to the week in crypto. Asheesh, thank you so much for your time. I really appreciate it. And I look forward to talking to you again.
Thank you, Kathy. It's been a pleasure.
Okay, so we can. Oops. Okay, everyone. So we wanted to give you every week. We're going to look ahead to the week in crypto to get you up to speed on what you should be looking for. Next week we have a few different developments that might be interesting to look at. The U.S. government. One second. Okay, what's up ahead in the week for crypto? We expect to hear more players in the crypto industry speaking out next week about the possibility of the US government issuing a digital dollar. One company, Circle Internet Financial, has already asked the Fed to hold off on issuing a digital dollar, saying private sector issuers such as Circle already have dollar based tokens that meet many of the same needs. Circle, as you might know, issues the USDC stablecoin. The Federal Reserve had asked for comments to be submitted by May 20th on the digital dollar, but comments are just trickling in now, so we'll keep an eye on that. Also in the stablecoin world, all eyes are on Terraform Lab founders Do Kwon's approved proposal to create a new Terra blockchain. The purpose of the blockchain is to help holders of the now worthless stablecoin UST and its sister currency Luna claw back some losses after the stablecoin depegged from the dollar about 2 weeks ago, erasing billions in value. The new blockchain is set to be created this week, and millions of Luna tokens will be distributed with the idea that they'll be valuable if people adopt the new blockchain. We'll see how this and other developments in the crypto world play out next week. On the regulatory front, Turkey is close to drafting legislation to regulate the Bitcoin market, especially businesses involved in the sector that operates in the country. That's according to Bloomberg. Separately, Panama may veto a bill approved by the legislature that would allow cryptocurrencies to be used as a form of payment in the Central American country. That's the latest for this edition of Crypto Defined for May 26, 2022. I'm your host, Kathy Chu. I'd like to invite you to visit TruthDAO.xyz and to join our Discord and Twitter communities and help us build this nonpartisan, unbiased journalism organization that will be the future of news. We'll be posting a recap of our interview with Asheesh on Monday, so please check out TruthDAO.news for the recap. Tune in next week when we'll interview Matt Hogan, Chief Investment Officer at Bitwise Investments. Matthew Hogan will be talking to us about the seminal study that Bitwise conducted in 2019 that found that 95% of all Bitcoin trading was fake. And he will talk to us about why that is no longer the case, but that Bitcoin ETF